You are listening to episode 15 of the Wealth Without Wall Street podcast. How nice would it be to know that you could have the most brilliant, simple passive income opportunity sitting at your dining room table nearly several times a year, but you're not taking advantage of it. And today we are talking about exactly what that revenue stream for you is, how you can access it, and the next step to implementing it today. Tune in. Welcome to the Wealth Without Wall Street podcast, your guide to understanding how to get out of the Wall Street rat race and start your own mailbox money lifestyle. Now, don't let the handsome Southern draws fool you. These financial minds are teaching our country to enhance savings, increase cash flow, and create passive income, all without the help of Wall Street. Are you ready to break through? Here are your hosts, Russ Morgan, Joey Murray, and Will DeShazer.
As we finished up Christmas season, one of the things that I always lament, I guess, in this part is whenever you're putting up the Christmas tree.
That's a wreck. I threw away ours with lights on it this year. I didn't even deal with it.
Oh, you're putting up you haven't gotten there yet, Will, but you will, is whenever you're putting up the ornaments that your kids made at 2, 4, 6, 8, all these different ages where these, handprints. And then as they really started making them, this is just always the part of the season where I get a little sentimental, I got to tell you. And I'm putting away stuff. I'm packing these boxes back. And I'm like, man, this happened way too quickly. It's hard to see that kind of like moving on, moving through. And we have a little bit of that moment here at the show today. We have Will, who I can tell you, I feel like not a kid, but a kid brother maybe, where Will's actually going to
you're old enough for me to be your kid.
No, not that old. Thank you, though. But I do have a nephew that's a little older than you, so I can start thinking of you like in that regard. But I do say, like, with all respect, I mean, Will has been working with us now for almost 4 years, and has just helped us tremendously with all these things. And if you've been listening to our show for the last 13, 14 episodes, you've got to hear his talent. And Will actually is taking an opportunity to advance his marketing career, which I can't blame him in what he's doing and how he's going about it. And so today's going to be your last episode with us, right?
It is. So for our editor listening, excuse the tears and edit that out. If you can hear tears fall on the mic, just go ahead and edit that out. But no, you're right. If it is my last show, I will continue listening to the show. I listen on Overcast. I don't know what app you as a listener listen on, whether it's Apple Podcasts or wherever you listen, but I listen on Overcast and will continue to listen. I'm really excited to see what you two guys have going on. I know we've got several episodes already planned out that are really great. Russ, you mentioned episode 13 just a second ago, with your kids leaving the legacy that they're leaving already with the ornaments, right?
That's right. Yeah.
I'm excited to move on. I'm going to continue to be working with you guys more so as a client, which is kind of exciting to be on that side of things. I practice what we preach day in and day out. No, I'm excited. I'm so pumped to see the show last 52 more weeks throughout this year and then onwards into the future from there. So you guys are in for a treat for the next few episodes and this episode as well, as we're talking about family
Banking.
Man,
that's a topic, because if you just finished last episode, which if you didn't, I'm going to go ahead and tell you to press pause, stop, and go listen to episode 14 on becoming your own banker, because it's going to make a lot more sense to you if you have listened to that one as you move into this topic, because this is the one where we're going to get into the weird, the awkward, the faux pas. Hey, Mom. Hey, Dad. I need to talk to you about a loan.
Oh, this should not be your everyday podcast. I'll go ahead and just throw that out there. Have you ever been in that position, by the way, having to ask mom or dad for a loan?
Oh, I can tell you, like, literally, my wife's in dental school, right? I decide to leave the career path that I was on. I'd been in this role, had advanced to this kind of corporate, Forbes 500 type company. Had been with them for 4 years, and I decided, you know what? I want to teach people about their finances. I really want to help people with money. Now, I didn't know anything about money. I'd gotten some classes in college on finance, but I really had not applied it. And I decide, while my wife's still in dental school, collecting debt, not making income, that I'm going to switch careers and I'm going to take this path on. And about a year later, my first daughter is born. My wife is still in dental school. And I'm first year and a half in the business, and we are struggling. Okay, it's struggling. And of course, you might imagine I haven't done the best job at that age of putting money away. And yeah, we had to have that conversation. It was real. It was like, hey, Pops, I need a loan. And I can tell you back in those days, a loan meant like, what you got? And, I promise that I'll still be your son.
Yeah. Yeah, my collateral is goodwill.
The idea of paying it back was not really. I mean, it was hopeful, but it was not sincere in the fact that it could necessarily happen.
Well, and if you've ever been in that awkward position, I'm imagining, okay, the people listening to this, if you're entrepreneurs, if you're business owners, real estate professionals, you've probably been in that position before. Having to ask for money. Maybe it was from parents, maybe it was from grandparents, something like this. But we want to shift the mindset of that conversation from being awkward and hesitant and, I don't want to have this conversation, to, hey, this is an opportunity for our family to benefit.
Both
right?
parties, and
How
even
cool would that
parties
be?
down the line into the third level.
That's right.
Because they will benefit from your business as well.
That's right. So if you're listening to this, you have a need for capital potentially, or maybe you're in that older generation that's looking for passive income opportunities. We're going to tell you in this episode how those two things really come together.
Yeah. And the key is that you have to start thinking from a mindset of family and not from a silo. Joey, you have created the silo effect. You're riding down the road the other day, Will. I get this text message of Joey riding through.
I was not driving. Okay.
Jessica,
through North Carolina, going through the farm hills of North Carolina, I assume, and I get like a picture of like this little grain silo, and he's like, silo effect.
That's right. That's right. But the reality is, most people listening don't know what the silo effect is. The silo effect is that thing that's keeping us from really implementing what we're talking about today, the family banking opportunity for our families.
Talking about money, right?
That's right. Each one of our family units has been taught, again, the Wall Street mindset has taught us that everybody has this individual financial picture. Your parents should have their own finances. You should have your own finances. Your kids should be on their own. Make your own way. Like, these are the kind of internal messaging that people are hearing to keep everything separate.
Well, and the idea of talking about money in any shape or form is football. We were riding down the road the other day, and my mom was talking about wanting a new car. And so my daughter in the back pipes in like, how much does that cost? And then I could hear my wife go to say, shh, don't ask that question. And I'm like, how much does it cost, Mom?
Yeah.
Because I want the idea of we shouldn't be able to ask these questions. We don't have to talk about money that way. That's not true. We need to open up that dialogue.
Well, that's a 21st century thing. This is a newish, back in the day, families did act as one.
Sure.
Right? They did pass wealth generationally. That was a thing. That was a priority. Now it's independence, strong-willed. I can do this on my own. I don't want to dibble and dabble in that. And they just close the doors on that to be on their dining room table and their dining room table only, right?
Well, and not only that, what are the factors that have led to that? Well, I think it has a lot to do with people not trusting their own family members.
Oh, no doubt.
Right? Why would I borrow money from a family member? That's almost like, no way. I mean, that's really a gift.
You mean lend money to a family?
Yeah. But did I say lend?
You said borrow.
Hey, I'm cool with borrowing that from Uncle Peck. Uncle Sue,
Right. I would never lend money to my brother or my sister, or whomever it is. We've been taught to say that because those have never been treated like what we're talking about today. They've been treated like, oh, they're in a bad spot. I just need to give them the money without any expectation of it coming back to me.
A family loan has always been, hey, Ma, by the way, I need some help.
Exactly.
It's not been, hey, by the way, I have never thought about the fact that I'm paying 8% on this loan, on this business that I have that's very successful. And you're trying to take money to the bank to get 1 to 1.5% on a CD.
Yeah.
Like, do you think maybe the same bank that's lending me money at 8% and giving you 1.5% for your CD, maybe we could handle that transaction together?
Wow.
That would just be too common sense.
Well, but see, we've never even thought about it like that because we've been so caught up with all that other part, all the riffraff of, hey, by the way, family dynamics of money, we shouldn't cross those lines. We shouldn't, have those conversations. And as we just got finished eating, Christmas dinner around the table with family members and talking about things and reliving funny stories as kids, why are we not bringing up finances at those tables? Why are we not finding out ways that we can grow and advance each other from that way too?
Wall Street separated us from that. They don't want us talking about that because the solutions they are right in many cases, right in front of us. But Wall Street has taught us that, no, we shouldn't cross those lines because of this, because of that, family division. This is just going to be a nightmare if you think about doing that. Just come over here and keep that third party. We'll be your third party here. We'll act as your family.
It's too risky, right, to be the lender in this relationship. So just leave that to us, the bank. And if you think about it, I want people to kind of visualize, right? There's 3 people in any one of these transactions. Go back to the Christmas dinner, Russ, that you were just talking about. You're sitting around the table. How many loans are represented at that table? Whether it's a business loan, car loan, student loan.
Oh, gosh.
I mean, fill in the blank, okay? Just start adding up the dollars at that table. Now think that there's an older generation at one end of the table and there's a younger generation at the other end. And they both have the same needs, but what they've been doing is abdicating that to a third party. That's that bank that's right there in the middle of all this. Why aren't we considering the family just like the Rockefellers did? Okay, we're talking about the Rockefellers and the Vanderbilts today as pitting them against each other. How did they continue a legacy? We've talked about that in previous episodes. They kept the money in the family. Well, we need to be thinking about that, especially as entrepreneurs and business owners, to do business a different way.
There's nobody, though, if you think about this aspect, what you're talking about there's nobody who will treat your family member better than you. There's nobody who can take care of that need better than you can. When we're talking about creating a lasting opportunity within the family, we, as you said, abdicate that off to a third party.
Yeah.
When family members need help, when they're taking loans and when they're creating opportunities, why would we ever give that to someone else outside of the fact that we're taught not to do it?
Well, and someone is going to benefit from the banking function that's going on in your family. And what we're saying on this podcast is it might as well be you. Might as well be your family benefiting, not the banks.
Well, and when you're talking about benefiting, what you're talking about is that somebody is collecting the 8%. Because I had this conversation the other day. I was talking to one of my clients and I said, by the way, whenever you take over the loan for your child on this, don't charge them the 6% that they're paying right now. Charge them 8%. Charge them 10%. And they kind of gave me this funny look like, wait a second. So you want me to loan my kid money first? Secondly, you want me to charge them more than what they're paying? I thought I would charge them less. I give them a deal. I'm like, this isn't about deals. We're not talking about our kids are overpaying because they got bad credit. Or they're overpaying. Maybe they have great credit, but that's just a going rate. And yet, it's better than what I'm getting. So why wouldn't I give them a better deal? It's not about that. It's about the fact that I said, look at it from your kid's standpoint. Here's the scenario, Joey. Your kid comes to you and says, all right, Dad, you tell me you can do a car loan for me. What's your options? And I tell you, here's your options. You can pay 0% interest for $30,000 car. And that means a $500 a month payment for the next 5 years. Okay,
I'm with you.
At the end of 5 years, you got a car worth whatever it's worth 5 years down the road. Second option is I'm going to charge you 10% for this car. So your payment's like $550. And at the end of 5 years, you're going to have a car worth whatever it's worth. And at some point in the future, I'm going to give you 50 to 75% of every dollar you gave me back. Which one of those two do you want better?
I'm going option B.
It isn't about the rate. It's about what's going to happen in regards to this. And that's what I'm telling the parents. I said, when they're giving you that money, you're going to take better care of it than they are. When you're later in life, you're better at, one, managing money because you've been there and done that, and you're looking for ways and better ways to use it. Secondly, the kid, they need to keep the money within the family. And so why wouldn't we do something like that? Why would we not allow them to, if anything, be forced savings in the money, and then the wealth is passed back down? So we talk about the family can better operate this than anybody else. I don't understand why we would do this other than the idea that we've been taught silo.
Well, and we understand that the fact is this is uncommon. There's nobody that you know of potentially in your group of friends that says, hey, guess what I did last week? I lent my brother X amount of dollars.
Bad idea.
I mean, yeah, nobody's going to come out and say, man, I'm so glad for you. Like, that's such a great move.
Seems like one of those Geico commercials, like whenever you like turnstiles that don't turn or bags that are wet or whatever.
Yeah, I love
right?
the one that's like, you like getting hit in the back of the ankle with a grocery cart. That is so painful. But Joey, to your point, if you're listening to the Wealth Without Wall Street podcast, you are uncommon.
That's
and
right.
good for you, first of all. So why aren't you practicing these sorts of things that are right in front of your nose? It's very, very simple to have these conversations. And Russ, you'd be the first to point out that you've had them.
I've had those conversations where truly we have gone to our parents and we have taken policy loans for our businesses, and we have paid back at great rates in their regard, meaning like high rates, much higher than what we would have paid if we would have borrowed the money from a bank. But I've seen the implementation. I've seen the effect of us not worrying about when we're growing our businesses and my wife's dental practice and watching it over the last 8-9 years grow. It's amazing to think of how this has happened because of our family's effect on it. And to use that business as a great example to say, here's what a business financed by families looks like in comparison to going to a bank and just having to, always show a P&L, always worried about, how are they going to evaluate me today? Because as business owners, that sometimes our bottom lines don't always look great. Because sometimes if we're, halfway taking care of the tax part of this thing, the bottom line may look pretty poor, even though we're living pretty good, right? I mean, we're taught to write off as much as we possibly can. Well, you go to a bank and you show them this and they're like, hey, doesn't look like you're doing too good. You're like, I'm doing fine. But on paper, I may not be doing good. And that's where family banking is awesome, because we're not having to sit down with and go through all those questions and be scrutinized at the same level. Maybe it's just literally pulling up collateral and saying, hey, Mom, you loan me this money. Here's what's going to happen if I don't pay you back. You're going to take possession of this. You're going to sell it. You're going to get your money back and then some. And by the way, that would really hurt my business if you did that. So I'm going to make sure I pay you back so that way we never have that conversation.
That's the key. You've got skin in the game now.
That's
and
right.
That is much different than what Joey was referencing earlier. And,
Exactly.
hey, you mind giving me a couple grand, Mom? Like, I kind of need it for this.
Here's my mountain bike as collateral or whatever.
Yeah. Well, and the key point here is this is a new idea to so many people listening today. You need to know that, one, it's possible for you to implement. Two, it is very beneficial if it's done correctly. But you do need a guide. You do need somebody that has been there, done that, to help you walk through it. There's a plan that has to take place. And Russ, you
can
do
do
all the
it.
time.
Though. That's the thing.
Yeah.
You can do it. It's not that hard. You really can do it. We've helped plenty of people just like you do it.
On both sides of the spectrum, might I add, right? Like there's two sides. There's the lender.
Yeah.
So there's the older being in your family. Maybe it's your mother. Maybe it's your grandfather in some cases. And then there is the borrower. Maybe that's you. And Russ, we have clients who are doing two different ways of family banking. Some of them are only saving in certain accounts for nieces, nephews, things like that. They're accruing wealth for them. And then there's the actual active non-silo, like we're talking about, confronting this, talking about how can we strategize and brainstorm together to do this? Where are the opportunities here?
Exactly.
So you got to have a plan. We mentioned that. Couple steps we're going to just outline, okay? If you're listening to this, you need to know what steps to take. The first, set up a brainstorming session, okay? We are happy to do that with you for the first 30 minutes or so just to kind of get things going for you, you can do that on our website, wealthwithoutwallstreet.com. Sign up for a meeting slot just specifically for family banking. We can help you assess what opportunities are right there. And for this step, just visualize yourself at the Christmas dinner table and who has loans that need to be financed by someone in your family. And then assess who are the people that maybe have the cash to do those lending.
Are you someone who would be lending? Are you someone that would be borrowing? You know,
Right.
in which aspect? Because that's the thing, that the older generations typically have access to the cash, while the younger generation has access to the cash flow. And so we need to find out like who's who in this play, so that way we can get all the characters in a row.
Well, and another key point of this is who needs to be insured. Okay, as we mentioned, this is around the idea of becoming your own banker. If you haven't listened to episode 14, make sure to do so in preparation for this. But we are talking about using specifically designed life insurance contracts around the family as the means to fund these. So you do need to understand who can be insured, who needs to be insured, and all the cash flows that go around that. So make sure that's just part of step one. Step two, you're going to have a customized plan that comes out of that session, that brainstorming session. So you want to review that. Step three, we're going to apply for insurance. Who needs to be insured? This is the point where we're going to make that happen, because you never know what you can do until you have an approval in hand. And then 4, you're going to implement the plan. That's just as simple as, okay, now I'm going to pay off this loan and you're going to pay me back. Or what collateral are we going to use? Like those are the
There's going to have
things.
to be,
And
agreements, promissory notes,
Yeah.
and agreements, and
Yeah.
liens, and other things that
And
need to be put in place.
That
Of
just goes to show you do need a guide when
Yeah.
doing this. It is simple, but please do not try to gather all this on your own, at least with your first time doing so. Go to the show notes on this at
Right.
wealthwithoutwallstreet.com/EP015, and you can find all these types of things to access.
So lastly, we covered the first 4 steps. The 5th step would be have an annual family banking summit.
Ooh, I like that
Okay.
name.
We've talked previously about having a legacy, leaving a legacy. By having something like this annually, you're tying your family all together and you are keeping it in the family, like we talked about with the Rockefellers. This is such a critical point.
But you got to create. I mean, if you really want to create a family bank, if you really want to have the legacy that could be left through not only avoiding the silo effect, but engaging the family. And we talk about that. I don't know if we really got deep into some of the successes that we've seen out of that, which is really the families more involved, more engaged with each other, the opportunity for the communication to be at the highest level. But if you want family banking, you've got to go through these steps. You've got to set up that session. You've got to be able to take advantage of the minds that exist around you that can help you think through how can we really get this going in our family so that we can have that plan that you're talking about, Joey. And I think that's important. Here's the one thing I will say, that if you do this, if you go through this process, if this is something you're really, really interested in, then once it's completed, we'll be glad actually to have conversations with family members and help you explain, hey, by the way, here's what I'm doing, or here's what I would like to do as a family. And this is what our clients get from us. This is things that we do and are happy to do it.
And we're going to also assist you with stuff like documentation, what paperwork is needed to implement this. We understand this is not your everyday thing that you've done in the past, perhaps. And so we want to assist you with that.
Well, that's where your expertise in being a mortgage lender for 11 years comes pretty in handy. You've done a little bit of lending paperwork in the past. You understand the requirements and the things to make sure that are in place.
Yeah, don't remind me of all those stacks of paper that I have perused.
Well, and you've got to treat this. I love what you said about having like an annual family banking summit. You do have to treat this like a business. It's no different. You know, the Rockefellers didn't just sit back and just figure things out. Unfortunately, the Vanderbilts probably did just sit around and I don't know. But I wasn't there. But the point is, banks operate, right? They have a P&L. They talk about the logistics of the bank. They sit down and are on the same page and on one accord. That's very important. I don't want to overlook that. I really like the idea of the annual family banking summit.
Well,
Please do that.
And that kind of goes to the last part. I think the last agreement that we make with all our clients when it comes to family banking is to continue to provide you the educational resources that only enhances this. Because if you're listening to this for the first time, you're like, wait a second, these guys are talking about lending money to my son or borrowing money from my parents. Like, that's weird. Never mind. Move on. But what you don't understand, what we're really talking about, is how do we grow wealth within the family that can be passed on for generations and generations and generations to come in the absolute best way. And by the way, we're not asking you to do something you're not already doing. You're already borrowing money from a family member. If you are going to a bank, any bank, you are borrowing money from a family member because one of your family members has money in a bank, collecting interest or letting it sit there at 0% interest. And all the bank is doing is middling that transaction.
That's right.
So we're not implementing an idea that doesn't exist. We're just showing you how to better use it.
Right. So we've already gone over the steps, but the first one, set the brainstorming session with us. Go on the website and do that today. If you are not ready to do that, we have a case study that we want you to download. Also, go to the website, wealthwithoutwallstreet.com. You can just put in your email address. We'll send it to you. You can review what we're talking about, see the numbers, understand better before setting up your brainstorming session. But ultimately, when you put this in place, what's going to happen?
You're going to feel like, man, I'm in more control of my money than I've ever been. When we go back and you just intro the Rockefellers, the Rothschilds, comparatively to the Vanderbilts, most people don't really understand the differences between those three families.
No.
100 years ago, the start of the 20th century, 1900, those three families were all about the same in wealth, The Vanderbilt family, Commodore Vanderbilt, had created this huge transportation shipping business that was equal to the Rockefellers and the Rothschilds. Now, over the next 100 years, there's been a great demise and great dissipation, if you will, of the wealth from the Vanderbilts. And it comes from this concept alone that the family members were not intimately engaged in the business that the patriarch had created and ultimately was sold off, and then all the wealth from it was just spent.
And now you can go visit their homes that none of them live in.
Yeah, you can visit one of them. It's very prestigious, the Biltmore, right? But that's the idea that they were not teaching something, as we talked about in generational planning a couple of episodes ago. They were not teaching something that was to be used and to taken advantage of in a positive sense. They literally just watched one generation create wealth and the rest of them just spent it.
Right. We want folks that are listening to this to implement this to have a richer legacy in more ways than one, right? And also to stop the silo effect. The silo effect is what is the disruptor to this whole thing continuing or happening. We want to limit the risk that our families are seeing as it relates to building wealth.
We talk about passive income on the show all the time, and I don't know any greater passive income for those of you that are in the older generation that are listening to this to say, hey, I'm getting a couple of percent right now in low interest rates. There's an opportunity for me to take on highly collateralized assets by people that I know and trust and earn double, triple, quadruple the rates that I'm earning. That's the best opportunity that I know that exists out there. You're earning 1% and you got a kid paying 6 or 8% to a bank for a business that's running and operating and is very successful. Why in the world would you not want to step in regards to that? And why would you not want to pay your parents that? Because every dollar you give to the bank will never come back to you. Every dollar you give to your parents, if they don't spend it, some portion of that should come back to you.
Assuming they've got a plan set up like we're talking about.
And that's why I encourage you to go talk to them. Tell them, insure me. Buy an insurance policy on my life.
Right.
Let's buy one on your life. Let's figure out this thing that these guys have been teaching over here at this Wealth Without Wall Street of how can we create our families to operate more like the Rothschilds and the Rockefellers so that we're not in a situation like the Vanderbilts.
Right. We're talking about taking your family from that silo to being more connected, to having a common goal, to, again, seeing each other at that dinner table, having common needs and being able to meet them within the family so we continue to grow wealth across that family and create a richer legacy.
All right. Well, this has been a wonderful episode, and I'm going to hand it over to you, Will, because I want you to be your final sign off from Wealth Without Wall Street.
I guess this is my final sign off. And for the last time, I want to encourage you big time, especially those of you who have a mother, father who are a son or a daughter, or even grandparents, this is something that I've actually done recently with my mother, part of this process. And I know Russ has done this, and so has Joey, and actively are doing this. But let me just encourage you to go to the show notes and set up a brainstorming session just to talk about if this is an opportunity and what it looks like. Seriously, spending 15 minutes talking to Russ or Joey can give you so much return on information, right? We talk about ROI all the time. Yes, there's a tangible ROI attached to this and taking control back of your wealth, but also just the return on information that you get from these two is phenomenal. So head over to the show notes to book your brainstorming session at wealthwithoutwallstreet.com/EP015. And for the last time as a co-host, not as a listener, I'm going to sign off. And it's been a pleasure being on the show with you guys, with both of you two. Those of you listening to the show, it's been so much fun seeing emails come in from people that are like, hey, let me grab this, let me grab that. Hey, I want to set up this session. That is so incredible. Please continue doing that. These two know what they're talking about. I'm excited, Russ, Joey, to move forward as a listener, to just kind of get a notification and be like, whoa, what? Nelson Nash is on the show today. That's pretty cool. They're talking taxes. I hope it's not just them and they've actually got a CPA on the show talking. Anyways, it's been a pleasure. It's so much fun doing this. Head over to the show notes and grab your brainstorming session now at wealthwithoutwallstreet.com/EP015. This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your terms in places you understand so that your wealth will never run dry. See you next episode.